Good evening. My name is Jeremy Oliver, and today I will be presenting um, the final group project for Group 4. The company we decided to choose is Albertsons. Um, we chose Albertsons because initially we wanted to choose Vons, but we found that Vons was a subsidiary of Albertsons, so we chose Albertsons to do our financial analysis on. So, just a little bit um, about the company. So they own Vons, they own Safeway, um, and they own quite a few brands that are worth over $1 billion. So it's a very sizable company. A lot of revenue, uh, slim profit margins, but they do have a lot of revenue, and they do have a lot of assets. All right, so the financial position. So we looked at the company from a standpoint of horizontal analysis and vertical analysis, um, as you'll see in the slides. So right now, total assets. Um, as of the latest reporting period, the company had reported total assets in millions of 24,735. So 24.7 billion in total assets. Uh, at the end of the previous reporting period, um, so February, their year ends in February. So at February 2020, company reported um, about 24.7 billion in total assets, and in February 2019 they reported 20.7 billion. So their assets increased by about 4 billion year over year from 2019 to February 2020. Cash and cash equivalents. Um, Company doesn't keep a lot in cash in equivalents. They keep right around 400 million in cash and equivalents. So at the end of the reporting period, they reported 470.7 million in cash and equivalents. Uh, Accounts payable. So at the end of the reporting in 2020, February 2020, the company reported just about 2.9 billion in accounts payable, and so 2.918 billion in the year ended February 2020, and the year ended February 2019. I reported 2.891 billion. So accounts payable went up slightly, not by much. So the last three annual reporting periods, annual revenue, they do post a lot of revenue throughout all of the companies. So in February of 2019, they reported, or February 2020 for the year 2019, they reported 62.455 billion in 2018. So year ended uh, February 23rd, 2019, they reported 60.534 billion, and in 2017, year ended February 2018, they reported 59.924 billion. So has an upwards trend for the last three annual reports. and they increase. It's been increasing consistently by about 3% per year. So next up, we're going to take a look at net income. So net income for year ended February 2018 was about 46.3 billion. I'm sorry, 46.3 million. And then the year ended February 23rd, 2019. Net income was about 131.1 million. And then in year ended February 2020, they had net income of 466.4 million. So a nice upwards trend on net income. Total assets. So the company had total assets of about 5.731 billion. Cash and cash equivalents were 470.7 million. Receivables were 525.3 million. Inventory, so they did hold a lot in inventory. They had about just over 4 billion in inventory, so 4.352 billion in inventory. Prepaid assets, they had 255 million, and other current assets they held 127.8 million, for total assets of 5.731 billion. Current assets. At the end of the previous annual reporting period of February 2019, the company had current assets of just about 6.25 billion. Then we're going to take a look at the liquidity ratios. So current ratio, it's current assets divided by current liabilities. So they reported current assets of 5.731 billion and current liabilities of 5.904 billion, for a current ratio of 0.97. Quick ratio was about 0.234. Receivables turnover was 112.38. So they turn over their receivables just under 3 times a year. Average collection period was about I'm sorry, they turn over their receivables just over three times a year. So 3.25 times a year they turn over receivables. Inventory turnover is about 10.33. So pretty good inventory turnover. And then next we have the profitability ratios. So asset turnover was about 2.74. Profit margin was 0.075%. They do have slim profit margins. They have a lot of assets, a lot of revenue, but the profit margin is really slim at 0.075%. They had a net return on assets of 2% and a return on equity. Return on equity isn't bad. Return on equity is about 25%, which is pretty good. Right around the industry average for return on equity. Solvency ratios. So we had debt to total assets about 91%, and times interest earned was about 1.86. So again, why Albertsons, right? We we looked at the company. We were actually looking at Vons, and we found that Vons was owned by Albertsons. Albertsons is actually a pretty big um, company. Um, they operate in uh, 340 markets across 34 states, and they are the number one or number two in market share in almost all of the major metropolitan areas. Um, they had about 24.7 billion in assets in at the end of the last reporting period, and they increased about 19% year over year. And that's the end of our presentation.